Hello, everyone, and welcome to Business Conversations with Gaitha. My name is Gaitha. I'm the founder and the CEO of the Regal Africa Group, and I want to welcome all of you for joining me and this amazing guest that I have today. And we'll really be talking about funding for businesses in Africa because this is something that I have noticed at Regal Africa, where a lot of businesses come to us because they want to raise capital, but they don't know where or how or really to position themselves for funding. So today I thought it would be great for me to bring different investment experts to really talk to you about what they look for when they're looking to fund a business in Africa, and really so that you can position yourself, like I said, around that. And again, that goes to the essence of why I set up the business conversations with Gaitha, because I thought this was really the time that all of us need to be learning, listening, so that we can level up as we go into the new normal. Things have changed, and the way we do things in the past is going to be transformed in how we do things in the future. So today I'll go ahead and welcome my guest. I do have with me Kenneth Muchina of Funguo Investment and Njuki of DOB Equity, and we'll soon be having George Gachara of Heva Fund. Unfortunately, he's running a little bit late. So what I will say is I will go ahead and just start off by just reading their bios so that you can get an understanding of who they are, what it is that they do, so that then you can be able to now join into this conversation and ask them the questions that you have in regards to funding. Again, my name is Gaitha, and this is the business conversation with Gaitha. So I'll go ahead and just start off with Kenneth Muchina. So Kenneth is a 43-year-old Kenyan national with close to 20 years experience in investment management and financial advisory in the East African region. Kenneth is a holder of BCom Honors degree from the University of Nairobi and a member of the Institute of Certified Public Accountants of Kenya, ISPAC. Kenneth is currently the Chief Executive Officer of Funguo Investment Limited, and he sits on the board of directors of a number of companies in Kenya and in the financial services, real estate, and agro processing sectors. Kenneth serves on a volunteer basis in the Alliance High School Old Boys Club as the treasurer and the Alliance High School Endowment Fund Trust as a trustee. Kenneth is a founding member and an active volunteer in the Busharians Mountaineers Group and the Alliance Classic Run initiatives of the Alliance High School Alumni Community, that have raised and continue to raise funds for the Alliance High School Endowment Fund through mountaineering and charity run events respectively. Kenneth is an avid mountaineer and hiker as well as recreational runner. So welcome, Ken, to the business conversations with Gaitha. I'll go ahead and also just read the bio for Njuki. Anne is an investment manager at the DOB Equity based in Nairobi. Anne focuses on sourcing and structuring potential investments for DOB and works closely with DOB's portfolio companies to support senior management achieve their strategic, operational, and impact objectives. She sits on a board of a number of DOB portfolio companies. And one thing you need to know about Anne is she began her career as a process engineer in the US and in Asia. Prior to DOB, Anne was a consultant with McKinsey and Company, where she served the leadership of Africa's top private and public sector institutions. She's now focused on contributing to the growth and development of early stage businesses in Africa. Anne is passionate about developing companies and their leaders to unlock value and drive lasting impact. Anne holds a Bachelor of Science in Chemical Engineering from Purdue University and a Master's of Business Administration in Social Entrepreneurship and Strategy from Duke University Fuqua School of Business. So as you can see, both Ken and Anne have had great experience in the investment world. And so today they will be actually sharing with us their experience and what you need to do to position yourself to get funding in business. So I'll go ahead and just start off with you, Anne, because you work at DOB. And one of the things that we've been seeing a lot happening in Africa really is around impact investing, right? We've been hearing about impact investing. And as you said, at DOB, you focus on that. So my question for you, Anne, is this. DOB Equity is an impact investor. What exactly do you look for in a business that is looking to access funding from your fund? And what are the main requirements you look for in a business so that more businesses can ensure that they qualify for funding? So what exactly do you look for when you're looking to fund a business?
Okay. Hey, and thank you so much for having me on as a guest here on your webinar / conversation. So I'm very excited to be here. I really appreciate this opportunity. So I'll start off by introducing DUB. So we are a Dutch-backed impact fund that invests in social entrepreneurs across East Africa, and that's in Kenya, Uganda, Rwanda, Uganda, Tanzania. So basically East Africa. Now, as an impact investor, I will start off by saying that every fund is different, and every fund will be looking for different things. A DOB, I would summarize what we're looking for in three ways. One, the business needs to have an innovative and high impact product or service, right? So are you doing something that's new and different from what other companies in the market are doing? Have you made a massive improvement in how for example, farmers are served or other stakeholders in the community? So there needs to be impact and it needs to be innovative. Two, we also, quite importantly, need to invest in businesses that are scalable. So what this means is that we need to be able to see that your business can attract different types of consumers and generate sustainable revenue over time. For depending on the type of business, this might mean that you are doubling revenues every X number of years, right? And again, if you're a software enabled business, maybe that's easier to do. And if you're more hardware related, then that might take a few years to get double year-on-year growth. And then the third thing, and probably one of the most important things, is that we are investing in people and investing in entrepreneurs. So we really want to get to know you as an entrepreneur. Are you an ambitious, high integrity person that has the grit and the resilience to really go through all the ups and downs that it takes to run a business? So really are investing not so much in a product or a service as much as we are truly investing in people.
Wow, thank you, Anne, for that, because I think that's what a lot of businesses need to learn. It's quite different than when you're going into a bank, because that's what most people get their funding, where it's all about your cash flow and you have collateral. And really, it's not about the entrepreneur, but it's about the business. And so the new way that you're going to see, and I know Anne will share more about what DOB is doing, she's saying they're investing in people, they're investing in the entrepreneur. So if you have an entrepreneurship mindset, you have integrity, you're resilient, you're innovative, you're improving value chains, or that's what I wrote here. You have a scalable business. Basically, you position yourself different. That's when DOB will take a look at you and say, can we back this person? So if you're here listening and saying, look, this is what I'm doing in my business, I'm looking for funding, then this is a good time again to pay attention to what Anne is saying and the rest of the panel as they go ahead and tell us again, what is it that you need to do so that when you approach them, they're able to say yes to the funding that you're looking for versus no, which is usually what we get when we go to some of these funders. So thank you very much, Anne, and I will go ahead and welcome Kenneth. Kenneth Muchina, he's with Funguo. He is the CEO there. And so the question I have for you today, Ken, as I call you, is at Funguo, you said that you bridge the gap between investors and entrepreneurs so that they can access capital. Can you explain to us really what the investment process is like when someone comes to Funguo and they want funding for their business? How does that look like? And what is it that you're looking for at Funguo?
All right, thank you, Anne. Thank you for having me this evening. Allow me to start by introducing Funguo. Funguo Investments Limited is a Kenyan company. We actually structured as a company, limited liability company, and our mandate is really to look out for investment opportunities on behalf of our shareholders. We do have a shareholder base of close to 390 shareholders, a blend of individuals and investment groups and corporates. And our history goes back up almost 33 years ago back to 1987. We've been around for that long. And we've made investments across a number of sectors in the Kenyan economy, and which we are very proud about that over that time, we've generally done pretty well in terms of giving returns to our shareholders. Now, the question of what our process looks like, our investment process specifically, typically it will start with an approach. By approach, I mean either we will identify a business that we think we are interested in and try and get a conversation going, either directly or through intermediaries, or we'll be approached by an entrepreneur or promoter, as the case might be, or even their consultants. So Gaitha might have someone that is looking for capital, and they'll come to have a conversation with us. After the approach, if we feel that this looks like something promising, we will start the process of screening. What you might hear out there is due diligence reviews. Itself, we tend to break it into about two main stages. There is what we call the initial screening, and that just helps us to quickly understand the business with a view of making a call whether we want to invest further time. And it's the only fair thing to do for both ourselves and our partners on the other side, to make sure that we're able to have an early call or make an early call as to whether this is an opportunity we wish to pursue further or not. And if it passes that stage, then we look at getting into detailed due diligence, which entails looking at different aspects of the business. You'll allow me not to go to the specifics, but it's everything from trying to understand the business itself, the industry, having a look at the financial, the historical financials, the forecasts, the management, the products, a lot of things. And while it might vary from industry to industry, they also tend to be very similar, because at the end of the day, there are certain things that must work in a business for the business to be attractive to an investor. At this stage, we'll also perhaps, or not perhaps, we'll always undertake a valuation of the business that we are looking at, because mostly when someone approaches us with a view of getting capital from ourselves, chances are they might probably have a very good idea of what their business is worth from their perspective. It doesn't mean necessarily we'll agree with the initial valuation. So we do undertake a business valuation, and then that allows us, once we are done with this stage, if the findings are that, again, this business is still okay for us to pursue an investment in, we will move to the third stage, which will entail making an offer or reacting to an offer that a proposal that might have been placed in front of us, and negotiation of terms. And this will be everything from the price that we are willing to pay for the stake that is on offer to maybe conditions that might come with our investment. And if this stage is successful, the fourth one is to close the transaction. And then we can move to the fifth stage, which is hopefully the happily thereafter, where we are a shareholder in a business, and the business is delivering the promises that it gave to us. So I would summarize that as the 5 or so steps that our investment process entails.
Okay, thank you, Ken. And I really appreciate you just step by step sharing the process, because I notice with a lot of business people, they think that once they need the money, it happens in a month, right? And what you've just basically told us, it takes time, especially the due diligence process, especially the valuation, because I recognize valuation is where a lot of deals go through, because a business might say, this is what I think my business is valued at. But when you actually look at the cash flow or the asset, it doesn't match with what they're asking for. So this is where a lot of the work goes in. But like you say, once you make an offer, the deal closes, then it's happy ever after. But I think for a few years, and maybe you'll give us more details, because I always tell people when they're looking for funding, especially from an equity fund, there's an exit. There's an exit, right? So maybe you'll give us more details about what Funguo is looking at in regards to exit so that people can be very clear from the very beginning. When I'm looking for this kind of funding, I know that I'm going to have to grow my business and I'll need an exit strategy so that then my investor, in this case, the fund, can actualize the returns in the business. Thank you very much, Ken. And I will go ahead and introduce George Gachara. Thank you again for joining us. Um, I think we started the show without you, or I wasn't too sure that you were in, but thank you again for joining us. What I'd like to do before I go and ask you your first question, I really want to read your bio, just so that people can have an essence of what it is that you do at Heva Fund, because I think you've done something very interesting in the Heva Fund. I'm very passionate about the creative economy in Africa. I think that's going to be the difference in Africa. So when I found out about what it is that you're doing, I felt it was important that you come in and just talk to the people who are in business so that they can be able to access funding that they need to scale up their business. All right. So in regards to George, George Gachara is a creative industries expert, art manager, and the managing partner at Heva Fund LLP. George is leading development and business exploration of the creative industry in East Africa and is providing leadership in creating long-term economic and cultural value in this dynamic sector. As the managing partner at Heva Fund, a finance and business support facility for creative industries in East Africa, George has raised and invested over $4 million in 40 creative industry businesses in film, music, fashion, and gaming, and directly supported over 400 creative practitioners. His hands-on approach allows for intimate understanding of the creative sector and has helped to focus his efforts on proactive planning, analysis, and client support. George has a background in communication from Daystar University in Kenya, conflict prevention and management from the International Peace and Security Institute in Italy, design thinking and problem solving from the University of Amsterdam in the Netherlands, and private equity and venture capital information from Strathmore Business School in Kenya. He brings to this role a unique blend of career experience working in resource development and governance, with particular focus in youth development, social innovation, and arts management. George has significantly contributed to the transformation of the creative economy policy environment in Kenya and in the region, most notably spearheading the development and finalization of Kenya's first film policy white paper in 2017. George was recently appointed as the advisor on culture to the Ministry of Sports, Culture, and Arts in Kenya. He also works closely with the Executive Office of the President to create and implement interventions for cultural, manufacturing, and creative economic growth. In addition to his work at Heva, George is also a member of the International Advisory Council of the Policy and Evidence Center, established by the Arts and Humanities Research Council of United Kingdom, a senior advisor on culture to the Ministry of Sports, Culture and Heritage in Kenya, an honorary fellow at Goldsmiths University of London, and a recipient of the International Development Committee's Outstanding Leadership Award. George is also a writer, a filmmaker, private pilot, and thought leader. So as you can see, George is in everything creative and culture and heritage, which I absolutely love. So welcome, George, to the Business Conversations with Gaitha. And so I just wanted to go ahead and just start off asking you a question so that we can continue on this conversation. So George, why did the team at Heva Fund decide it was important to focus on funding the creative industry? Why the creative industry? Most funds don't even look at that, but you guys decided this is the one space you want to focus. Can you tell us why that happened?
Thank you, Anne, and thank you, colleagues. I've heard about DOB Capital. I am glad to hear from Kenneth and to know that we have investments that have been going on for many years, but are run by relatively young people. So thank you for inviting us. I'm happy to respond to your question, And I'll respond by way of also introducing Heva Fund. So for a number of years, my business partners and I have successfully run a publishing company that published film, music, fashion, literature, and all manner of that good stuff that we go home to after we leave work. And that's the business that we've been doing for more than 15 years. And in the process of doing this, we realized that the people we work with, whether they are talent, whether they are actors, whether they are suppliers, there is a gap in financing, either because the mainstream commercial investment space has too much opportunity in real estate and agribusiness and energy that they don't consider the creative industry, or rather maybe there is a slow uptake or a mismatch between the expectations of the commercial sector and that of the creative entrepreneurs. And as a result, we started supporting our suppliers and our pipeline, so to speak, with better terms, with more prompt payments. And so we realized that there was a business area that we could grow into as a subsidiary of our main company that could finally become what Heva has become, as a standalone investment facility, not only for Kenya, but also for East Africa. And so I know that you've mentioned some of the things that we've done, including investing in some 40 different companies, using numerous instruments, from debt-based instruments to equity instruments. And again, those numbers have since shifted because that was I guess an older estimate. We've done a lot more now. Why did we do this? So there's first that we enjoy the arts. And I want to argue that there's no better working environment that promises high return expectations, where there's no stress and only happy people, than the arts. So we enjoy and exist in the arts, from the clothes we wear, to the toys our children play with, to the books we read, to the music we listen to the interior decor in our houses, to the school uniform, to the shirts we are wearing. All this is the province of what I call the creative industry. And so there's a lot of opportunity, so to speak. So we don't have competition. So it's a great place to be. I will challenge the rest of the investors to take a chance on this sector. But also, if you think about those that are interested in returns, whether they are profit returns, it's the only sector that we get to have irrational expenditure. The valuation here is not linear, like in most sectors. We have dynamic valuation for many deals, but also there's what we call a multiplier effect. If you think about each creative industry, say film, if you think about film, film is has a multiplier effect of more than 5. So you find the number of businesses that are supported from one film project are ridiculous. I'll give an example. If you want to move 3 billion shillings in Kenya, so to speak, if you go to the construction industry, it will take you 1.5 years to move 3 billion shillings from your bank to a pile of stones that's, say, 8 to 10 stories of an office block. But if you want to move it in a month, 3 billion shillings, you just shoot a film. A film has the capacity to absorb 3 billion shillings in 3 months. And we've seen this in the blockbusters that have been shot in Kenya. And you employ from crews who are providing meals and transport and security and accommodation, to talent where you are you have art department, you have stylists, makeup artists, musicians. So the multiplier effect for those that are interested in impact is crazy. But also what is important to us is that if you look at the outlay of our country, they say that, especially the region, the average age is 19 years old. If you look at the sectors that are productive and that carry the most number of young people, you will realize that other than agriculture, which has been analyzed, the only other sector where people are producing intellectual property in music, intellectual property in literature, intellectual property in fashion, intellectual property in gaming, that allows them to not only earn in wages, but they can also earn in royalties in the exploitation of successive use of their copyrights, is a creative industry. So we not only pay wages, but it's a sector that makes wealth. And it makes wealth for average Kenyans. So I'm quite excited to be both an investor in this space, but also someone who makes good business out of this space, and also a supporter. And with those few remarks, thank you for inviting us to this conversation. And I'm looking forward to more engagements.
Okay, thank you, George. And I liked the last thing you talked about, which is about wealth, because I'm always talking about we need to be creating wealth as Africans. We need to be creating generational wealth, and you use what you have to create wealth, right? And so the creative industry is something I know I'm very excited about. You talked about moving from being business support to funding, because even as you support these businesses, eventually they need access to capital. So if you can be able to work with these businesses in this journey, it will make sure they're successful. And then you talked about the multiplier effect. Definitely, we need more job creation in Africa. So thank you again for what you're doing at Heva and really sharing with us what it is that you're doing in the creative industry. For me, I'm very passionate about the creative industry, but even more around the knowledge economy. I think because I'm former banker and I've always been interested in the financial service industry, I know that's going to transform Africa. And I know Ken has a lot to say about that because he's been in this industry. But I also believe in the production of land that Africa has. So agribusiness, real estate, and energy. And the reason I'm bringing this out is because I feel like there are so many opportunities. People are locked on one thing, real estate or plots, but there's so many opportunities to create wealth. There's so many opportunities for investment. So as business people, this is what we need to be looking at. So the question then I would go into Ken is really find out from you. So Georgia told us that they focused really on the creative economy, right? But for you at Funguo, like what industries do you focus on and what do you look for in a business before you fund it?
Thank you once again, Anne. Before I dive into that, I think I'll admit or I'll confess, I was listening very keenly to George because the creative space is one space that I think largely has not received the attention it deserves. And my view has been that, that is in terms of financing it, my view has been that you can tell a society that is becoming affluent and that is going beyond the hand-to-mouth kind of existence by the amount of creative activity in terms of production of content especially, and consumption of the same that's going on. And therefore, I'm excited to see that there's actually a fund here, right here in this country, Kenya, that's focused on this. And I'll be very keen to learn, and I'll look for George after this, in terms of what exactly they've been doing and where the opportunities for the more traditional investment houses like Funguo might be, because I must tell you, creatives, especially content, we know there's, we can see so much coming in. You look around, you can see platforms like Viusasa, Kenyan platform with quite a bit of content, and I do always ask myself, who finances this stuff? What goes into creating these? Do people make money out of this? But it's exciting to see that, indeed there are people actually already, working with these people in the creative space to bring these to the market. Now, coming to Funguo, what industries does Funguo invest in? I think that's a question, and what do we look for in a business before we invest? In terms of industries, I would say we are a little dynamic. The list that I will give you will definitely change in another few years, perhaps. It's not what it was 5-6 years ago. And that is because we look at industries, or we always do kind of a scan of the environment to decide what industries we wish to focus on. What that tells you is that Funguo is what some people might call a generalist investor or an agnostic investor, in the sense that so long as we understand a business and we can see opportunity in it, chances that we will invest in it, of course, subject to the process that I took us through earlier. So currently, our list of industries that would really that get us excited, top on the list is manufacturing, generally, but specifically manufacturing of fast-moving consumer goods. And in that, food and cosmetics are areas that we're really looking for opportunities. We are looking for, we are talking to people. We've closed an investment in the last 2-3 years in that space, and we are looking to close more. Agri-processing, that is taking raw agro-produce and doing some value addition, whether it ends up being an FMCG product or it's on a B2B basis. That's again something that we are very interested in. The next group of businesses that we're interested in is trade, both retail and wholesale. Health space, we are interested specifically in people in provision of health services, and manufacturing of supplies into the health space. That could be pharmaceuticals and non-pharmaceuticals. The fourth group or the fourth industry that we are interested in is education, but primarily kind of educational institutions, not so much the publishing side of things. Financial services, it's been a darling of ours for a couple of decades. We're still interested in it. We've made a couple of very good investments in that space. One of our star investors up to now is in that space. So we are looking for more opportunities in that. Lastly, real estate, but I will say real estate at the moment, we've really trimmed it down in terms of what we really want in that. But two main things stand out for us at the moment. If we could get a good someone doing something in the student accommodation space, that would be interested in. That is both development and management of student accommodation. And finally, real estate, and this kind of goes back to manufacturing, supplies into real estate. So producing stuff that is then utilized in real estate development. So that kind of summarizes the list as we see it today. But then again, outside this, sometimes something might walk through our doors, so to speak, that might not be in this, but we say, okay, this deserves our attention and deserves investing in. So it doesn't mean that those 5 or 6 are the absolute list that we have. Anything else could walk in through, and we still think it merits an investment with the capital that we have.
All right. Thank you, Ken, for that. I know for everyone who is watching, you're seeing that there's an investment fund by Kenyans, over 390 shareholders, all Kenyans who are institutes, individuals who are putting money behind businesses. But you have to be able to showcase that your business is worth funding, right? So are you in a growing industry, right? Has your business done what it needs to do for it to get the funding that it requires? You heard Ken say very well that they're looking for opportunities. So if they're looking for opportunities, they have the money to fund your business. What are you waiting for? So what you need to be doing is, if you're in a business that is ready for funding, you need to be approaching us at Regal Africa or going directly to Funguo, but you have to be ready. You have to be ready, you have to be prepared. And earlier Ken mentioned the fact that many people approach them through either going directly or through advisors like us. So before you actually approach the kind of funder that is looking to fund you, you really need to be able to have everything in place So they're willing to look at your project better and really go through the process like you mentioned, so that it's easy for them to say yes, no, or maybe in a couple of years. But there is money. The question is, have you positioned yourself for funding? So thank you again, Ken, for that and for letting people know that there is money, but you're looking for really good projects. So go ahead and the next question is for you, Anne. The question that I have is basically for DOB. What is it that you'd like to see more businesses do before they approach you for funding? What would you like them to do before they approach you for funding? Because I know this is a big thing for a lot of investment funds. They get a lot of inquiries, but things don't go through because businesses have not positioned themselves well. So what is it that you're looking for in DOB?
Yeah, sure. Thanks, Anne. And you alluded to this in talking about businesses being ready. I'd say the big thing is that the businesses need to be able to have, and this is quite important, set the right foundation before they approach us. So what does this mean? So you need to make sure that all of your business registrations are up to date. You don't owe KRA anything, right? So there's really no tax liabilities on your books. You have all of the right operating permits as well. And that essentially you're running everything, very, very clean. We unfortunately as investors spend time with potential companies, supporting them to clean up their business, when in reality they really should have done this before, right? So if you have expats, are all of your expats have the right immigration permits? Are you withholding tax for the right transactions? Are you submitting all your pay as you earn? It sounds quite basic, but it's interesting to see how often we see companies that are, unfortunately, really not ready. And so, because of that, then we'll, really pause conversations and say, look, I think this is an interesting business idea. You really meet all of the, metrics we talked about. It's innovative, it's scalable, you have the right team behind this. But we just can't have that discussion now because we think you're probably 6 to 9 months away from being ready from a legal perspective. And to be honest, it doesn't always take that much to be ready, right? So just make sure you have a good accountant, like a good CPA who can, really support you to ensure you have, all of your accounts and your liabilities are in order. Get a good registered company secretary as well, because then the COSEC can go through all of the right, all of your legal documentation and really, help you to get your house right and build that foundation so that then we can come and say, look, so these are the walls, let's expand this here, let's raise it from, ground floor to first, second, third floor as investors. So I know it does sound quite basic, but I'd say that's probably the one thing that people need to do to make sure that they're ready. And then I think once you have that ready, then let's definitely have a conversation. We want to know more about your business model. We want to know about your unit economics. Like, does this business make sense? Can it scale? What does this look like?
All right. Thank you, Anne, for that, because as you were talking, I was like, it sounds so basic, but I meet these businesses all the time and they're not ready. Simple things as books, right? You just have to be compliant. That's what I always tell people. You just have to be compliant. Make sure that everything is done. You have audited accounts, you're keeping your books, there's a board, you know everything about your business because there's due diligence that will be done by all of these investors. But unfortunately, a lot of people are not ready. So I really like the fact that you emphasize be ready so that then it's easy for you to make a decision or let them know that they need to do X, Y, Z before you can relook at their business. But again, it goes back to you people as business people to make sure that you get your act right before you go to the investors because they have the money and they want to fund you. That's why they're in business. You just have to position yourself and be ready for that. So thank you again, Anne, for just explaining to us what it is that DOB looks for, but also some of the things that you think businesses need to pay attention to. And one of the things that I say, because we are advisors at Regal Africa, if you cannot do it internally, that's why there are professionals out there who will walk with you on this journey, who will make sure that you're ready before you go to this funders. So thank you, Anne, for that. So then I'll go ahead to George, because I know we have a few minutes and I really want us to go to the audience to ask a few questions around what they're looking for in regards to funding. So George, you alluded to this a bit earlier, but I need you to just maybe speak more about it. What are the challenges that the creatives face when looking for funding? And what do they need to do to ensure that they access funds from Heva? I see a lot of creatives, they are good at what they do, but they're not business people. What do they need to do so that they can position themselves for Heva Fund to fund them?
Thank you for that question. And when you sent me the question, I was happy to consider it, but I will try and address it first by way of just communicating what our perceptions at the beginning and what they are now, which probably will just help clarify a few things around the perception that the market has towards creative industries. So a lot of people, when they hear creative industries, they think a painter, they think an actor, they think the labor that goes into the industry. While when you say construction industry, people don't think about the mjengo person, the labor that goes into the industry. They think about the building or the infrastructure. And so that's a perception issue that we always meet because I guess we are where we are and we live in a country that we do. So there is cultural industries that are good for enjoyment, they are good for culture, they are good for all manner of social services, which should be supported and people must patronize. But also there is a commercial side of it. And the commercial parts include anything between fashion houses, brands like Vivo. I know that one is a household name that a lot of people know. We have entertainment companies that either run numerous products, either DJing, music production, literature publishing, film production. So there are many different types of industries that we consider within the creative space. And for us, we've been able to invest from, say, the easy stuff where you're investing in a fashion brand, and we have more than 5 of those active brands, to the very whimsical stuff like investing in game development. And I know some of you in traffic, you play with some of the games that we've invested in, and you buy life or new sections, which allow you to do microtransactions that end up in the business model of these companies. So what do we think for us that are challenges? The first challenge is that a lot of creatives usually are very good at creating the product and not the structure around the product. And so they are very efficient in the things that they know best. So you're probably a music producer. You know how to make hit songs. Like if you think about Ogopa DJs, every Kenyan of my age enjoyed for more than 5 to 10 years a catalog of music and a catalog of musicians. But the question is, how was the business structured? And was it structured in a way that could attract formal investors, not just informal investors? And was it also compliant, and so on and so forth? So we find a huge perception deficit first from investors. The second thing is that we find a great deal of informality, as Anne already illustrated, that we have to put in a lot of work in creating an ideal pipeline, and mostly it's just formalizing. And for the creative industries, it's formalizing on 2 areas. The first area for formalizing is definitely just business structuring. And the second area for formalization is rights management, because a lot of creative industries, they create intellectual property. and there are numerous people, usually more than 10, involved in one successful project. And all of them share in the development of rights, but also you split in successes or losses. The other part is because the industry is very young, you have a lot of early stage challenges. And so we find that the ecosystem has a lot of early stage businesses and huge businesses. We don't have many in the middle. And so we have our early stage facilities that we develop for young, dynamic businesses that are in their first cycles. And then we have growth facilities for the very mature businesses. So how we deal with both informality and the relative young structure of the business is that we begin with debt-based investments, which allow us to enter with low risk and an ability to interrogate the businesses more closely, to support the cash flows of these businesses, and while at it, learn the attributes of the businesses, the key people in the business, the ability to produce more intellectual property, and the traction that intellectual property has in the market. And by the time the businesses are able to repay their first debt facility, then we are able to graduate them into more complex structures. And so we have pseudo equity structures, and one of the most popular ones is a convertible item. So we transition people from debt into convertibles. And finally, if you can survive our scrutiny with both debt and convertible, then we acquire stake. And so we have the entire outlay of businesses that are on the debt side of the portfolio, and those that are in the growth stage. What we've realized with our sector, because of limited commercial investment, then a lot of high-performing businesses are locked up at early stage because they only rely on, say, owners' own capital, because there's no commercial investment. And if there is commercial investment, it's usually poorly structured. It's usually informal money that's impatient, that has unfair expectations, and poorly structured. And so when we structure the finances, we almost realize exponential growth for the businesses that we've gone into. And it's a space that we are excited about. What do we think that our entrepreneurs, especially in the creative industries, should come with to Heva Fund? Unlike other funds that start with a business analysis, for the creative sector, we start with a product analysis. Because for the creative sector, the shot and the design is what speaks to the customer. The strength of the music is what speaks to the customer. The product is what has to resonate. Then we can build the business and the business structure around the product. And so that has always been our approach. So for those that are actually lucky to come with a product and a business, those relationships are quick and they are fast and they are dynamic. But for most of them, we definitely start at a business, at a creative evaluation, then we go into a business evaluation, and only after business evaluation, then we can have an offer. And as soon as you've gotten an investment with us, we always like to be your subsequent investor. So the right of first refusal is ours because we want to grow with our businesses, and then we can always benefit together much later. And these are values that we have learned through running very successful creative enterprises ourselves. So our model is informed by our own practice.
Okay. Thank you, George, for that. That's quite interesting. Just the fact that the way you look at these businesses, you say two things. They're creative, and then there's creative business, right? So how do you will fund a commercial creative business because there's a business behind it, not necessarily the creative. So again, even the creative industry or whatever business that you're in, you need to really position yourself. And one of the things people always ask me, are you very passionate about the creative industry? I always tell them it's because of the opportunity I saw as an African in the US. A lot of people don't know, but my first business, I actually had a clothing line in 2005 called Africa Creations. My sister Diana, who's still based in Los Angeles, was the creative, was the business person. So I always tell creatives, you have to again find a business partner who has a different strength than you. So I was able to look at this opportunity, look at the business, create a business model, move from fashion to jewelry to all these creative things from Africa and transfer, export them to the US. But she was the one behind the brand and the messaging. And the reason I'm saying this is I always tell people, look at the industry that you're in, figure out how do you position yourself because there's money to be made. So thank you for that. Also, you mentioned the fact that we have a lot of very early stage businesses in Africa, not only in the creative industry. And I always tell people, depending on what stage you are in business, there's a different way of funding it, right? So a more established business will have more, maybe different opportunities than you in early stage. So even in business, you really need to know what stage of business that you're in so that you know who to approach. And if you don't know, then you need to be able to speak to an advisor who can help you with that. And I also like the fact, and I don't know if all other fund managers do the same thing, the right of first refusal. You know, you've already grown this business and it's doing well, and then they go to a different funder. So I think that is very interesting that you do that at Heva. Now we just have a few more minutes, and I really like it when people ask questions in the audience. So if you are on Zoom, just go ahead and write your question on the chat. And I know this professionals will be able to answer that. I do have a few people who are on Facebook. I see Ayubu says great insights on money matters. Good. I also see Susan Awar who says interesting conversation, the creative industry and funding. I have never thought it could be a profitable venture in Africa. You hear that, George? They didn't think that creative industry would be profitable. And I do see other people joining in. And so I guess for me, it was really to make sure that people demystify this fact. It doesn't matter where you are, whether you're in agribusiness. People look at agribusiness and they just think about farming, but Ken talked about agro processing. That is where the money is made. That is how you create a brand behind this produce that you're doing. And that is how you make a lot of money. And that's when people will fund you as opposed to maybe just only being the production side. So if you have any more questions, just go ahead and put them on the chat. And I know, like I say, Ken, Anne, and George will be glad to answer you. Well, we're waiting for questions. I have a question for you, and either Ken, George, or Anne can answer this. Do you focus on funding women-owned businesses? And what can more women do to ensure they get funding for their businesses? Anyone who knows me, they know I'm very passionate about women in business, in Africa specifically. And that's because I see they're overlooked and yet they do great business and they will pay you back and they're good in what they do. But we see a lot of people not looking at them. And so, Anne, George, Kenneth, are you focused on funding women in businesses? And what should women do to get funding at your different funds? So maybe we can start with you, Anne.
Sure, happy to. So it's a good question because at DOB we are, open to obviously funding all entrepreneurs regardless of background, ethnicity, and anything. And myself and one of my colleagues lead our work on gender lens investing. So we do quite a bit of outreach to different women's groups, within SMEs and within the startup space to ensure that we are proactively reaching out and making sure that women are equipped to raise funding, whether it's from DOB or whether it's from other funds. So it's a particular area of passion of mine, as is supporting and investing in local entrepreneurs.
Great to hear that. Anyone else want to take a go at that? Women and business and investing in them.
Well, Anne, I don't think we don't call it funding because the idea of funding sounds like free money to do cute things. We think women should be investable. At Heva, especially, I have three insights. The first one is, as you rightfully put it, we have realized in the last 5 years of our activity, of our lending activity, over 60% of our loan book is carried by women. And it's all and all of it is performing, and the impairment rate is lower than 10%. So it makes a business case to invest in especially debt-based investments in women-owned businesses. We also have a portfolio where we are working together with the government of Kenya in adopting a textile market that has more than 2,000 textile traders. Those are micro businesses. And over 80% of these are women who are supporting households. And when you look at their traction, if you look at their business, you start to realize a lot of women are stuck at micro businesses because there's no investment that starts to look at specific things that delay capital accumulation for women, especially those who are in child raising stages. So their businesses remain there because a lot of the time is spent at family and taking care of young children. And so if they're in businesses that do not accommodate childcare and health, then you realize it has an impact on the growth of the business, even beyond capital. But my final thought is that when we come to the larger tickets, and when I say smaller tickets, anything below $100,000, we find there's a very high appetite from women, and they take a lot of these facilities, either short-term LPO facilities for different things. But if you go to the larger tickets, that is $300,000 and above, we find there's very low uptake from women, and maybe it's a cultural issue or maybe the size of businesses, but it is our hope that the same practices that women have around ethical use of money, being able to repay, can allow them to build the confidence to move from the lower ticket levels to now aspiring to get the larger tickets to now scale their businesses, because we found that there's an amount we call the missing middle, which is $300,000 that allows businesses to move from early stage to medium, where they invest in efficiencies, they secure their supply chains, they enter into the market in a more sustainable way. They find the appropriate standardization and registration processes. So we find very few women are transitioning to the larger side of businesses. They are remaining more in the lower side.
Micro side. And that to me is what I want to see change. But then that's where it comes to different funds and different investors. Are they funding businesses? Because a lot of the women you say are in the micro business, a lot of them are in debt. So they're taking small debt, and they're just surviving as opposed to thriving. So I think that's a conversation for another time, because we're out of time here. But I'd really like to thank you again for joining in. I know, Ken, you maybe have a few things to say about that, but maybe you can include that in your last remarks so that we can, end this conversation. But like I said, it doesn't end here. We can continue it another time. Let us know what is it that Funguo is looking for, deal size, businesses. What is it that you want businesses to know in Kenya, in Africa, that this is what you're looking for so that they can get fundings from Funguo? Go ahead and let us know what it is that you're looking for.
Okay, thank you very much, Wamboy. I'll try and keep this as brief as I can because of the time factor. Um, in terms of what we look for in a business, and this is broadly across the industry notwithstanding, the first thing we look for is the industry of operation. I mentioned the industries that right now are of interest to us. And what are we after when we say we are looking at the industry that the business is in? It's really the history in terms of how robustly has the industry been performing. But equally important, if not more important, is the outlook. I mean, what are the prospects? Because we wouldn't wish to get into a business in an industry that is essentially a dying industry. I mean, the business itself might look good, but when you look at the prospects of an industry, much to get excited about. I mean, we could talk about industries that we've seen in our lifetime, our working lifetime, essentially go down the slope. The business itself is obviously going to be looked at in quite a bit of detail. Again, we want the history of that business. That kind of tells you we are more inclined to a business that has a bit of a track record. The track record might only be 2 or 3 years. It could be a bit longer, but the business needs to be on a growth curve. Therefore, the outlook of that business itself is something we are keen on. We want to be able to clearly see your unique selling points as a business. What is it that sets you apart from the others? Do you have protected technology or intellectual property that sets you apart? Do you enjoy certain barriers to entry, whether created in-house or just by in terms of maybe you might even be beneficiary of government policy that protects you and makes you extremely lucrative. I mean, your business or position quite lucrative. The business, also a business that has, especially when it's very new, a business that has ability to disrupt the industry it operates in and creatively disrupt and in the process make a business for itself, that is definitely an enterprise that we want to get involved in. But if it's an established business, we would expect that it's fairly strong in its industry and able to defend its position. That kind of also brings in the aspect of longevity of the business concept. Some businesses, they are like a flash in the pan. Nothing wrong with it, but they're here today, but easily they are out of fashion in 2-3 years. The nature of our investment, I must say, is long term. Unlike the typical PE fund that is likely to have an investment horizon, let's say 5, 7, 10 years, we will stay in business in a company for as long as our investment objectives are being met. And therefore, we want to be patient in terms of the capital we provide and grow with a business. An important part, and I think this was mentioned by both Anne and George, is really the people we find in the business. This is both the owners and the managers, if it is a business that's large enough to have that distinction between owners and managers. We are after about five things, and I think this is important for our audience to, those who might be thinking of engaging, not just with us, but I guess with virtually any investor out there. We are looking, one, for your credibility and reputation, both as a person, as a business person, or as a manager. Second, we are looking for your competence in running the business that you have. The effectiveness of a team, that tells you we are looking at businesses that are likely to have more than one employee. So we want to make sure that the team operates, effectively. And that brings in also the team dynamics. It's one of the things that we look at keenly, how people within the business get along with each other. And that itself then addresses a question that is key to us. We will try early on to figure out whether there would be chemistry between ourselves and this particular team that we find running a business or owning a business, because everything else could work very well. But if we can't get along, we can't sit and have a cordial meeting, let's say at the board level, then the chemistry test is failed and it's not worth investing however much we might think we could make out of this. The next thing that we'll typically look at is the owner's involvement in the company, or what we like calling skin in the game. So you've got to invest as much, or if not more than what we invest, because we would not be looking to get into a business where the owner is not really bothered whether the business opens on Monday morning or not. We want someone who is really committed to the business. An important thing that you might figure out already as an entrepreneur, we will be looking at the valuation that you place on a business and related to it, the expected returns as an investor that we will get. Tied to that is what we like calling the returns profile. It's good to be promised a return, but and as you might appreciate, that a return would come in two parts. There's what you might get every so often in the form of dividend or a coupon payment, that is payment on a debt facility. And then there is the aspect that would come with capital appreciation of the business as it grows. We try to balance between the two, but we love always having a bit of cash coming in every so often. So a dividend profile, even if it's not in place now, but it's kind of visible in the near horizon, we love that. It's also important for us, and we try to be as honest as we can with ourselves, to make sure that we can give you more than just a check. That is, if you approached us or we approached you and you told us our needs are X amount of shillings, and we wrote the check, we need to be able to give you more than that. So we try to evaluate where we can plug in as well, so that besides the check that we write, there are other ways that we actually add value to your business. And finally, it's the ability or our ability to, relative to the investment that we've made, to have an element of influence or control in the business. This should not be taken in the negative sense, where we are seeking to come and take over your business. No, we wish, in any case, whenever we invest, we always look for minority stake, but a strong minority stake. That means something below 50%, but needs to be preferably above 20%, so between 20 and 49%. And we seek to get ourselves involved at the board level, and rarely, if ever, at management level. So we prefer to limit our involvement at the board. So of course, we expect a strong board, a board that does what a board is expected to do. And we expect that our, let's say, influence at the board is commensurate with the stake that we take. Thank you very much, Anne.
All right. Thank you, Ken, for that. Before I bring on Anne and George, there's just one question, and I just wanted to just state something, because I know we're out of time and this conversation can go on and on, because a lot of people have really been wondering where do they get funding outside the usual banks or the usual microfinance or different things of that nature. So there's a question from Nyambura Maya, who says, I run a kids holiday camp to nurture friendships among young kids 3 to 12 years in Kenya. I would like to know if I can get funding to expand the business in the new economy. What I would say, Nyambura, and to everyone who's here, if you're looking to expand your business and you're looking for funding, you can actually reach out to us at Regal Africa, info@regalafrica.co.ke. We have a program called East Gold Connect, where we connect businesses to funders, investors, and advisors. So if you go in based on the questions about your business, we will then be able to let you know if you need an advisor or who you can go to, because there are very many things that need to be looked at before we can actually say if your business can be funded or who would be the best partner for you. So that's what I just wanted to say. And then I do see Mahia say, Moiki, who said, congratulations, Romboy, you're really doing well in bringing to us people who are expanding our horizon and really letting us know our landscape. You're opening our eyes, and we thank you big. Please send the presenters' contacts to the attendees in our report hereafter. Okay, I'll be sure to do that. And exactly what I was thinking when I started the business conversations, a lot of you have all this great information, and where do people find you? And I think this is a great platform for you to be able to share what it is that you can do to support the business community. So I'll go in and just ask George, your last remarks. What is it that anyone in business in the creative industry needs to know about Heva Fund, what you're looking for, so that they can be able to come to you for funding? Go ahead and let us know, George.
Thank you, and thank you for this invitation. I am so happy to listen to you and to support you, Anne, at Regal Africa. I'm glad to hear from my colleagues, Njuki and Kenneth Muchina. I've benefited quite a bit from your presentations, and I'm sure the audience too has. As far as Heva is concerned, We publish the opportunities that we have on our website, and our application portal is always on the website. So you really don't even need to call me. You just need to look at the facilities that are available. All the criteria and the opportunities are published. And as soon as you find alignment with any available opportunity, let me know. And only if you can't find, then you'll see an email on the website that allows you to write directly to us. And if you think your idea is really, really cool and it's not covered within some of the funds that we have, you can send us a pitch deck. We will definitely look at it and send you a quick line, whether we are interested or not. But other than that, you can also subscribe to our newsletter on the website, where we publish our opportunities and opportunities from our investors and other people's in our network that you could benefit from in the future. So thank you.
All right. Thank you, Judge, for that. I'll then go ahead to Anne, an amazing woman in the investment world. There are very few of us in financial service, especially in investment. I would like you to just give us your last remarks for businesses, regardless of gender, just businesses that you're looking for. What is it that you're doing at DOB, and what is it that you'd like us to know as business people so that we can position ourselves for funding with a fund like yours? Go ahead, Anne, let us know.
Sure. So maybe I'll start by saying thank you again, Anne, for having me here. Wonderful to speak with you, as well as to speak with George and Kenneth. Lots of similarities in what we do, even if we have different vehicles. But I really enjoy seeing the similarities and also just the opportunities to learn from fellow like-minded people. I will say that I'll switch gears a bit and talk less about what the businesses need to do in order to get funding, because I think we've talked about that in quite a bit of detail here. And if you need to send any information or have any questions, feel free to reach out to me directly, and we'll share my email address after this. I think the big message here is that I think as entrepreneurs, or even as people in employment, just to emphasize the fact that we realize as investors that it is a tough journey that you are undertaking. It often feels thankless. I know that as an investor, it is not my desire to squash people's dreams, and so whatever feedback you get, make sure you're sort of separating feedback on the company versus feedback on who you are as an individual, and just it's a long journey. So make sure you're in it for the long run. Take good care of yourself, your physical health, mental health, emotional health, to be able to give you the energy that you need on this race. It really is a marathon, and not a sprint. So take good care of yourself. Surround yourself with good people who will challenge you and encourage you as well. I think this can't be emphasized enough, right? I think a healthy business starts with a healthy you. So please, always take care of yourself, and make sure that you also take care of the people around you. Thank you.
Thank you, Anne, for those last remarks. Thank you again, Kenneth and George, for just taking the time to come and share with us what it is that you do. I keep telling people knowledge is power. This is the time for us to listen, learn, and level up so that we can be able to actually build ourselves up, our families, so that, again, we can create wealth, especially generational wealth. So with that, I'll thank everybody who joined us today at the Business Conversations with Anne Gaitha. We're here every Wednesday at 6 p.m. East African time, 8 a.m. Pacific Standard Time. And again, we're here to be able to bring you information that will help you scale up your business to ensure it's successful. So again, thank you again for joining in. Take care and God bless. Bye-bye.
Bye, everyone. Thank you.